So, in today's episode, I just want to bring to you that with this pullback in the market, it is a Black Friday in the market. You can't agree more. So, with this pullback, it's an great opportunity to make money while the market goes up. Because I can tell you, next year, again, next month to be precise, when the Federal Reserve start cutting interest rate more, again, market is going to respond aggressively toward this. And when I say aggressively, meaning that we can analyze and interpret a lot of stock, and I can tell you where you want to be. Before we do so, like and subscribe if you think that I've earned your time. But welcome to the channel. I'm Damani. I do break down stocks, whether swing trade or day trade. You let me know in the comment, and I will do so for you. So, what caused the market to pull back this morning? So we got some economic data this morning that was significant towards the Federal Reserve cutting interest rate, and we came in as expected. So, which is the PCE price. At 10 o'clock, both the core and the PCE met. They both met expectation, which is 0.2% and 0.3% respectively. So expectation we're here, which is 0.2, again that was expected, came in as expected, and again expected 0.3, 0.3 came in, but none regard less that happened. The market pulled back because of only one reason. This I wasn't fearful of it. Why? Because I know that mark economic data has been pretty good where it's concerned. That's the reason why it influenced the Federal Reserve to be cutting at this point. So I wasn't too worried about this. But the only thing that brought the market down was nothing other than one stock. And before I go over to that, I just want to share with you one thing that I'm loving, and I'm keep loving it in regards because it's dropping, guys. Once the new treasury yield continues to drop, it is in favor of the market. And not even in favor of the market. If you're planning to get a home, if you're planning to borrow any money, it is in favor to you also. But my best advice is just wait, because again, in September of this year, we were down 3.6%. So with this said, I am waiting and I'm watching 10-year treasury yield to continue to decline before I do anything. But I can tell you that once 10-year treasury yield continue to decline, it's good to borrow money to do anything you want to do, whether buy a home, refinance your home, or do anything. Personal loan, you name it. But there's one thing that caused the market to drop, and it's this stock that we spoke about in Sunday stock market breakdown, and it's continuously causing the market to dip, because look at it, 12% down on the day, 17 points down. This is just on the day. From yesterday when it reported earnings wasn't good, it didn't meet Wall Street expectation, and this is the main reason why, as you can see, a huge pullback to 121, currently trading at 124. But I can tell you this is just on the day. We want to see, let's look at it at 180 day. We want to see a steady before you even think about getting any shares of Dell. Yes, Dell pull back and it like it's going up. I'm going to show you a perfect example of another stock. Look at our MACD cross downward, RSI just a barely push up. They always do this to get the young investors, which is the newbies. When they see a stock pull back, they say, yes, it's at support, we're going to buy. But let me share that with you before share something else with you before you even think of doing so. Look at Target. Target got rejected, missed earnings, pull back, consolidate a little bit. This is what you want to see, a nice consolidation. So once you see this consolidation, guys, and also look at my MACD right here. My MACD is about to cross. Once my MACD cross right here, hovering over my mouse, once this MACD cross down here, then it's time, it's telling me that, hey, we're on the upside. But until this MACD cross, I would stay away from this stock, because why? It's significantly down. Here to date, this stock, let's go and see here to date how much this stock is down. All right, where's my R? Tinker symbol, TGT. We're going to break down Dell as well. So Target is trading currently at 130. Let's see. here to date. 1 year, the stock is down 0.73%. So if you had bought the stock last year, even at 177, you would have been tremendously down. Year to date, the stock is down 8.3%. So definitely not a buy for me. Definitely not now. For the last 5 years, if you had bought the stock again at $206 a share, you would have been down on your stock on your money tremendously. So it's not a buy for me. Definitely not a buy at this point. I would wait, give it some time to recover, and then so my plan is to be on the greater side and the safer side. Once a stock started trading, once get rejected, earnings came out, once it start trading um above the moving exponential line, this is when I get strong confirmation that the stock is going upward. Even if it pull back, chances are it's going to recover, in a day or two or a week. Bad news can come out, and of course it can continue to dip, but definitely. So I just want to show you what's going on with this, with a perfect reversal, and how to trade a perfect reversal. Of course, you could have got in at 120 and you would have been up over $10 on your shares. But that's if you want to go long, or you don't care about the investment for another 5 or 6 years. So again, as you can see, the stock pulled back and it's trying to find its way on the upper side. So let's go back over to Dell. So look at Dell. Dell sold off, and for me, there's no support right here. I have nowhere to draw a support because last time it pulled back, I will say at 116. So if 116 doesn't form a support, then I don't know. It is wheresoever Dell finds a support. But for that, I'm leaving it alone. Also, CrowdStrike pullback was trading at $379 a share. Now currently trading at $340. I'm not sure if they missed earnings, but I didn't take a look. Let me see. Earnings 1026. After hours, earning conference call. Not sure if CrowdStrike missed their earnings, but the stock is still up, pull back a little bit, but it's still trading above our 200-day moving average. Unlike Dell, comparing to Dell is trading above as well, but again, we don't know. This is the main reason why the market is trading downwards, because of a strong miss on Dell, the significance of Dell. All right, let's go over to Nvidia. So who doesn't think it's time to get in Nvidia? I can tell you, think again. Why? Because Nvidia, as you can see, previously I drew this support long time ago. This was back in October 31st. Now we're in November, approaching the ending of November. Nvidia found support at 131. My prediction was either here or back to 90. As you can see in previous videos, today pull all the way back to previous support again. Let me go over this again for you. So Nvidia pulled back, found its support back in October, the last day in October, and then today found support again at $131. And look, it's on the green side now, trying to find its way back up. But guess what, guys? Our MACD is not telling us this. So it doesn't confirm with our MACD like previous, like right here. Look what it did. It pulled back, found support, and then a couple weeks later, MACD confirmed, push all the way up, push all the way up, push up, push up, push, and then got rejected, and then now it's on the downside. So this can be a reversal, not sure. It also can be a pullback because my MACD is still not confirming that it's a reversal. So it's something to watch out for. On the 20-day, it's telling me that it's a reversal. As you can see, pullback, found its support at 131.80 and trying to push up. Let's see if it passes over 135.57 and continue to reverse and trade upwards. We don't know. We just have to keep an eye on the stock to see if it does. But where NASDAQ is concerned, as you can see, last 20 days, NASDAQ pullback and trying to recover from the sell-off with Dell, but on the day still down 180 points. So that's something we're watching with Google. A lot of stuff going on with Google. So Google is still trading un, un unappreciated because of what going on with a lot of stuff. They're getting sued. They're axed. They have um, numerous regulator ask them to get rid of Chrome and a lot of stuff. But before you do so, guys, again, I have found a support on Google at 159. With the big sell-off they had, didn't come to 159. On the day, the stock is trading at $169. So market is still open. It's currently 3:18 standard time, and that's something I just want to bring to your attention. A lot of stock are in their consolidation phase, but one stock that I'm watching, and I've been watching this stock. Why? Because based on how the stock look, I think it's a great buy if you get in at right time, but I'm still watching it, which is ticker symbol MLI. If you look in my previous videos, I spoke about this stock before and I told you guys that I'm watching it. So when anytime this stock, I think it's still in the rejection phase, anytime. Why? Because look at our MACD. As you can see on the pullback, MACD cross, and what we did, we went all the way down. RSI still not in the oversold area, so I'm still watching it on 180 day. 1 year, we still have some pullback to do. As you can see, when this stock took off previously, it continued to rally. Now it's in this rejection phase. So let's see if we find support right here at $79 a share, because it's currently trading at $80.86, fluctuating. So let's see if we do find support here, then we can rally backward, rally up, and then if we do on the rally, we can buy to lock in some profit on the way up while it goes back to $96. So we're looking at like $16 a share, which is not bad if you go in aggressively. But if not, guys, then our next support would be at $64. But again, I'm watching. Even if it found support right here and bounce, I will gradually get in just in case it get rejected at our simple exponential line. So again, you can do your homework. Again, tinker symbol MLI. Watching this stock because it, to me, it shows a lot of upside. Not another stock I want to bring to your attention, which is Wayfair. Previously, Wayfair sold off all the way to $38, and I knew Wayfair was going to bounce back. Why? Because again, it did this before. 1, 2, and look what happened. With time, Wayfair bounced back, consolidated a little, and what it did, push all the way up to $48 a share, from 37 to 48. That's a lot of profit right there, guys. And then pull back, and if it continues to rally, then I can tell the next stop is $76 a share. As you can see, the MACD is in no way of pulling back. MACD is all the way up, RSI pointing up as well. But again, do your homework before you invest in any stock whatsoever on the stock market, because remember, this is your hard earned cash and you have to make sure whatsoever you're investing it in, it's worth your time. So while you sleep, the market is making money for you. That will be my close today. I just want to say thanks. Thank you for the like. Thank you for the support. Continue to share this channel so others can see what's going on and how can we prepare for the market. But in regards to tomorrow, there's not a lot of significant data, where it's just a Chicago PMI, which it's I'm not sure if it's going to bring any movement to the market comparing to the PCE price, because that's what the Federal Reserve use to make their decision whether to cut interest rate or to hold back or whatsoever they think it's more suitable for the market. So with the Chicago PMI tomorrow, which is Friday, I should say, not tomorrow. Tomorrow, no economic data. I think the market is closed at 1 o'clock tomorrow. So stay tuned and like and subscribe, and let me know if there's anything you guys want me to break down for you. I would be happy to do so. Just put it in the comment and I will do so. But until then, like and subscribe and stay tuned to the channel for more update. Bye for now.